All right. The boys are back in action. I have my protein drink. I have my poke chips. I have my juice. And we are ready for another weekly news session here together with our managing editor of iGaming, Jake Evans, and Nico Jansen. How are you guys doing today?
Pretty good, thanks, Pierre. How are you doing?
Yes, absolutely. I'm doing fantastic here. We have a week to go until our New York event, of course, that's taking place. We're heading over on Sunday in a couple of days to New York, so it's happening. It's getting closer now. Which day is it you are heading over, Jake?
I'm heading over on the Monday. So I pick
the
up my
Monday.
suits from the dry cleaners today. I'm ready to go.
Ah, nice. nice, ready in style. And Nico, you are traveling tomorrow already, I think.
Exactly. I'm traveling over to tomorrow. Just kind of prepared all the documents, which
Yes.
the guys at the Holy Grail want to see from my end, and I'm pretty sure that one document will be missing. So I will be speaking to one of the custom guys once again. They're like, "Hey, Nico, it's you once again. So you missed like file XYZ27B." I'm like, "Oh yeah, sorry." So and then it's always fun entering the US. It's always fun.
Well, it helps to have an angel face and an angel voice, Nico. So without legendary smile of yours, I don't think you're gonna have any issues in customs, I believe.
Yeah, they'll wave you right through, Nico.
That's exactly right. So good morning to everyone for who are joining us here today and this morning. You have made the absolutely right decision to spend this hour with us here today, because we have an absolutely electric hour in front of us here today, with some really interesting movements within our tiny but very dynamic industry here. So, I mean, just to summarize a little bit what we have ahead of us, which stories, Jake, have stood out to you this week as the managing editor of iGaming, just to summarize a little bit what we have ahead of us here?
Yes, yeah, absolutely. So it's been Q1 results week, so all the big US casino guys have been reporting their results. But I don't even think we're going to have time to cover any of those today, because there's been so much news elsewhere. So obviously, MGM kicked things off with the offer for LeoVegas first thing at the beginning of the week. Then there's a new major shareholder at Kindred that looks like they want to recreate something similar for Kindred that happened to LeoVegas, with their new influential stake in the business. Then we've got what else are we discussing? California. Looks like sports betting might be coming to California after all. We thought that was dead in the water this year, but people might get a chance to vote on that ballot this November. And then finally, if we have time, I think DraftKings has obviously completed its acquisition of Golden Nugget, which gives it a nice online casino kind of iGaming diversification. But yeah, I don't know if the stock market's buying it. We'll get around to that, I'm sure.
Yeah, absolutely. It's all around really interesting movements of the industry, especially from an investor perspective here, looking at the movements within the public market. So I think we should just, the hour is short, and we always have a lot to discuss, and we always have a lot of thoughts. So let's just jump straight into it. I think it's quite clear the big story of the week is the fact that MGM have put a bid to acquire the traditional Swedish online gambling operator LeoVegas. And this is interesting from a number of perspectives, in my opinion. First of all, we're now seeing American traditional land-based operator who is now looking to diversify outside of the United States. And it has been a discussion point that we have been speculating on over the last 1 or 2 years, if this was a move that the American giants would start taking. And this is kind of the first step into potentially others following along here. And so, it's also interesting from the perspective that it's kind of like a lion supports lion kind of thing here. MGM, the traditional lion logo they have, and LeoVegas, obviously, it's all in the name. And I just thought it was funny in the crypto world. There is this saying that Ape Together Strong. It's from the movie Planet of the Apes. And that movie has inspired the crypto scene. That's why we see like Bored Ape Yacht Club and those these kind of expressions of apes in the crypto world. But now we are seeing in the iGaming world basically a lion support lion here. So Jake, just heading over to you here. What's your summary of this story, and what's the takeaways from your perspective?
Yeah, definitely. I think you've touched on the most interesting point there, Pierre, and that it now gives MGM a kind of international footprint in terms of online casino, especially, which they didn't have before. And like you say, we've seen a couple of operators in the US try that already. So DraftKings obviously had a failed bid for Entain, and MGM also bid for Entain, and that was knocked back. So, you know, LeoVegas is probably a cheaper alternative, and I think there are obvious brand synergies there, like you've highlighted with the Lion. You know, that's quite basic way of saying it, but Gustav Hagman has always said that the brand would translate really well in the US because it's got Vegas in the name, because of the Lion logo and everything else. So I think that was probably an attractive point for MGM. But yeah, it's interesting. Now they're going to have a mix in international markets that they've never operated in before, sort of highly regulated European markets. And they'll be going toe-to-toe with Entain in a lot of these markets. If you think of the UK, yeah, most of mainland Europe, really. But the biggest question for me is still an unanswered one, and that's what happens with BetMGM. You know, that's the big online US-facing brand for both Entain and MGM in their joint venture, and it can't remain like that forever. One of them is going to have to buy it out from the other. So there's been a few questions this week, kind of, you know, will MGM buy the brand and put it onto the LeoVegas proprietary platform? You know, there's a million different moving parts there, and it's going to be complicated because I think both companies really value it as an asset. So it's not going to come cheap. But yeah, that's kind of what I would keep my eye on from here on out.
Right, it's a good point here, as you point out, the joint venture between MGM and Entain, essentially, where they have this 50-50 ownership between themselves of the BetMGM.
Yeah, and it has it's probably second in terms of market share in the US as well. It's a more successful business than DraftKings right now. So.
Right. And the business obviously are very intertwined with each other. Obviously, BetMGM is using the technology of Entain, so kind of separating themselves from that platform is not as straightforward move as you would imagine. Bogdan is pointing out something interesting here as well in the chat, that M&A will be a hot topic for the upcoming 2 or maybe even 3 years. Not surprised at all with the bid for LeoVegas, and more to come, of course, with the current US hype. And that is a very good point. And obviously, M&A in general in the industry has been really hot for a number of years at the moment. And the consolidation that's taking place in the industry now, first it started on the European side, where the likes of Flutter and Entain emerged as the giants here. But then now it's kind of a reverse process taking place on the American side, where the American giants with the enormous resources are starting to pick up the potentially now the traditional European operators. So it'll be interesting from that perspective to see as well. I also thought it was quite interesting as well, the bid itself. It's around $600 million is the valuation that MGM has put on LeoVegas, and that constitutes a 12x multiple on the EBITDA of LeoVegas over the last 12 months, which is also an interesting note to make here, especially since the share prices have come down quite significantly amongst the operators in the last 6 or 9 months. But a 12x multiple on the EBITDA is still a quite strong bid, in my opinion as well. And I know that there has been quite a lot of interest around LeoVegas over the last year or so for a potential acquisition. And the rumors that I have heard, it's a others who have been trying to approach LeoVegas for an acquisition have just gotten the reply from Gustav Hagman, the CEO and the co-founder, that he will not take a meeting if the bid is not under 100 Swedish kroner per share as a bid. To put that in perspective here, the bid from MGM was 66 kroner per share. But at the end of the day, MGM is MGM, and it's not just a random buyer that is trying to kind of.
And it's been unanimously recommended as well by the shareholders, including Gustav. And I think it was designed to be a kind of non-negotiable bid. MGM went in high, and they said we're not going in any higher. I think they saw what happened with the Entain and the speculation and the rejection that surrounded that, and the will they, won't they, and just thought, right, let's avoid that and just get it over and done with in kind of one fell swoop this time round. So yeah, I think this, unlike DraftKings and Golden Nugget, which was a bit protracted and the deadlines were extended, etc., I think this one will probably happen as the timeline suggests, which I think is either June or August. They expect it to close. I'm pretty sure that's right.
Nico, what's your thoughts here around the LeoVegas and MGM?
Yeah, so first of all, it ain't the first move from a US-based company. Just remember Caesars buying into the technology of William Hill, and they resold literally, all the retail premises back to 888. Quite interesting move as well, as the final price has not yet been agreed on. So 888 still lowering the overall price. And I pretty much had an interesting discussion with Fetcher, which we also had here as a guest once again, with respect to, okay, why does MGM actually, has eyed on LeoVegas? It's also technology. First of all, LeoVegas, if I'm not mistaken, they still buy their sports betting software from Kambi, but for their casino software, this is state of the art, pretty much state of the art. And this just emphasizes what the US deep-pocketed companies are pretty much aiming for. They are up and pretty much looking for tech. So first of all, the William Hill tech being sold to Caesars. Now MGM pretty much buying the tech of LeoVegas. And I'm pretty sure there are also other big companies. It's always rumors going around with Las Vegas Sands, what they are specifically eyeing for. So as Bogdan already pointed out, we have seen big M&A activities. We are seeing M&A activities, and we will see M&A activities. And tech is probably one of the leading factor which will lead to companies, European-based, being bought from US companies as well. So the story ain't over.
Yeah. And we should also point out the fact here that MGM doesn't only just get LeoVegas here in this affair. They also get the ventures under Leo Ventures, so the investment arm of LeoVegas. And we have Carolina Palk here comment in the chat, who is the founder of Beyond Play. I believe Leo Ventures owns a 20% stake in that business, something along those lines. If I'm not totally 25%, and they also hold 80% now, revealed in the last quarterly report, 80% of Casino Grounds of our friend here Tobias Svensson. This is the CEO of that business. So they also get some quite interesting shareholding in kind of ancillary like kind of businesses to under Leo Ventures as well, which is interesting too. That should not be forgotten, because Beyond Play of Carolina Palk is seen as a potential up and comer and an organization that has a lot of potential to grow into something significant here. So that should not be forgotten either, that LeoVegas have been really smart and targeted in their investments as well here, which plays a factor too.
Yeah, and I think Nico was absolutely right to point out the William Hill acquisition by Caesars as well, because if you think Caesars and MGM are kind of direct competitors on the Las Vegas Strip, similar heritage, similar strategies, but they took one look at the William Hill European business with Mr. Green, and they just thought, right, we're getting rid of that. We can't be bothered to manage it. We don't know what we're doing. Let's concentrate on what we're good at. Whereas MGM has obviously gone the opposite and have thought that's what we want. And we want a kind of European mix. And it will be interesting to see what they do with the kind of grey side of the Leo business. I think, you know, they are a compliant business, but obviously they've got some exposure in India and LATAM and various markets that haven't been regulated yet, which is in a completely new ball game for MGM. And it, you know, that side of it is very different to how US regulators go about their business. So.
Yeah, exactly. No, that's a good point. I think LeoVegas, if I remember from memory now, like don't quote me, but I think the regulated revenue is in the 60s in percentage points, something along those lines. Which,
yeah, that sounds familiar.
Yeah, which 40% potentially unregulated revenue is a substantial chunk of the business, and that revenue is probably more profitable than the regulated revenue. So you guys are right in saying that it will be interesting to see how MGM will go about that regulated unregulated share of the revenue as they merge. Yeah, not the last words in this story, I believe. It will be interesting to follow. So yeah, interesting note on that point, and I mean that this is a great segue into the next topic as well, which is the fact that there is an hedge fund that now owns about 10% of Kindred, that is now kind of pressuring Kindred into going down the same route as LeoVegas, of basically asking them to consider to be acquired as well. So Jake, once again, you wrote the story here as well. Like, would you like to summarize a little bit on the story here of Kindred potentially being the next target for, you would assume, an American operator?
Yeah, definitely. I mean, it's interesting. All the stories we're covering at the moment, there's kind of parallels everywhere you look, and Kindred and LeoVegas you could throw into that kind of basket as you know, competitors. They're very similar companies structurally, and yeah, I think so. The chief investor officer and the founder of this hedge fund, Keith Meister, is obviously built up this 10% plus position in Kindred, and he actually sits on the board of MGM, who we've just discussed, obviously. And you know, when MGM came in for that bid for LeoVegas, I think their share price went up sort of high 40 percentage points. So it's amazing and we've seen it happen time and time again, what rumors of an offer or a concrete offer can do for a company's share price. And I think they've dug their claws in now, and they're going to try and pursue something similar for Kindred. And you know, if you're an investor in Kindred, I think you probably were expecting something like this to happen, because it's not immediately obvious what the growth story is for Kindred. We've talked about this before. You know, they're kind of heavily reliant on third-party technology providers, so it's not like they have that really good platform that LeoVegas has that people are seeking in the market right now. They've got a much higher regulated mix. I think it's 75% around that, so almost 3/4. And you know, all of those factors have played out in recent financial reports, as we've seen. They had the hardest time by a mile. So something had to be done, and you know, this hedge fund has kind of taken the bull by the horns and thought, right, let's try and push for a sale or some consolidation. And you know, they're all very corporate and polite in their statements. Corvex saying we've spoken to the board and management and we're happy with them, but you know, let's consider all options. And then the Kindred board came back and said, kind of, we're happy in our strategy that's been established so far. So yeah, it's going to be interesting. And Kindred's been rumored as an acquisition target for some time as well, but I guess the question is who in the market would go after them.
Yeah, fanatics. I mean, you know, Carolina points out something interesting as well, which is, you know, Kindred has been trying to pursue this kind of vertical integration strategy, which is very expensive, but they are trying to set themselves up as a tier 1 operator in the long run by bringing the technology in house, which also makes them into a more attractive acquisition target, especially for an organization like Fanatics, who are seeking an operator with the technology, the full technology stack, of course. And Carolina,
I don't think. Sorry, I don't think Fanatics would be the best fit, because obviously they're looking for sports betting technology, and Kindred are very close with Kambi. So it might not be Fanatics, but a gaming-led operator certainly that could plug into that Relax platform. That would be ideal.
Yeah, absolutely. But at the same time, Kindred has committed themselves to build a sports betting platform here as well. So yes, maybe today they are very, very close to Kambi, but they still have committed themselves to this kind of vertical integration strategy. So the question for Fanatics is like, what other alternatives are there on that front? I mean, it would be kind of like DraftKings, but outside of DraftKings, I'm not sure if there's any immediate alternative. Is there anyone you can think of, Jake, when you think about Fanatics?
Well, there's Rush Street Interactive.
RSI.
Again, they're sort of gaming led more, but a lot of investors in Rush Street were expecting them to announce a bid from a bigger company in their quarterly results this week, and it didn't happen. But it's funny, isn't it? You can make a case for every company that's either prey or a predator at the moment if you look hard enough.
Yeah, it's always so easy to predict backwards. It's always seems so obvious after the deal is announced, right? It's a famous saying by Todd Hassalt. He always says that it's easy to predict backwards. But if we look at Relax, I mean, like Carolina mentioned here as well in the chat. I mean, Kindred in general is having a lot of headwinds at the moment from all areas of the business, essentially. And even Relax, they have a difficult time to grow. In the last quarterly reports, the revenue were flat year on year in Relax, just like Evolution has a hard time to grow NetEnt. NetEnt revenue also flat year on year. Relax revenue also flat year on year. And as you point out here as well, Jake, I mean, the strategy of pursuing regulated markets for an operator like Kindred is currently proving very difficult for the geographical distribution and ability to grow revenue for the organization. It isn't immediately clear where the growth is going to come from in Kindred in the next, let's say, 12 to 18 months. And that puts them in between a rock and a hard place. And so I assume that this is the reason why now one of the largest shareholders here in Corvex Management are asking Kindred to pursue a sale, because it just isn't clear what the strategy, how the strategy will turn out anything else than a costly affair for Kindred in the next 12 to 18 months with the exposure they have in the US, which is stated by Henrik Jansen to be the most important growth market. They have been decreasing revenue quite significantly in a quarter-on-quarter basis over the last 3 or 4 quarters. And they don't have the resources, especially now when they have lost 35% of the EBITDA from the shutdown of Netherlands. It isn't exactly clear how they are going to continue the investments into the United States and turn that ship around. And that's why it's really difficult to be a shareholder in Kindred right now, because you have to brace yourself for a couple of quarterly reports that are not going to paint the best picture.
Yeah, you're absolutely right. But I would say, you said it's easy to predict backwards, but if we look forwards, I mean, everything moves so quickly in this industry. Nothing is permanent. So, like the last 2 quarters, for example, have been hell for Kindred. But let's say we get into H2, so then we've lapped the COVID comparative period, so things will normalize into Q3 and Q4. And then it only takes one of those unregulated markets that Leo are in or Betson are in to regulate and lock operators out, and then the pendulum swung completely the other way. It's easy to sort of kind of look short term.
And I don't know how many examples there are of markets where a gray market turns black, or the Netherlands was obviously a good example here. But It's a hard stop, yeah, but I don't know how many other examples we see of markets turning that aggressively from one day to the other. I would assume that the more likely outcome is more on Ontario situation, where a gray market turns white. And so let's say, for example, Betson are dabbling their feet in South America and doing that really successfully. They are geographically distributed in South America, so they are not dependent on one market per se. But the discussions in South America and the local markets, it's more like, when are they regulating rather than when are the markets shutting down, if that makes sense.
Yeah, and that kind of goes back to what I was saying. These headwinds would only be short term, but
Yes.
because it's happening now, it feels magnified. But
yeah. And that's a question as well of Ontario. It will be interesting to see in the next couple of quarterly reports how the EBITDA especially will be affected from the classic operators that have been operating in Ontario now when the market has gone from gray to white. Because on the one hand, the operators now have to pay a 20% tax in that province, but on the other hand, they now have the ability to grow the market, right? So it will be interesting to see how that's going to affect the bottom line at the end of the day from the operators, and that's also will give us an indication, of course, how markets will turn out in other potential regulated markets in the future, as well, particularly in South America, because the sentiment has very much been on the European side that regulation has been hurting the operators. I mean, look at Sweden, look at Germany, look at Netherlands, of course, UK, of course, and so on. But Ontario have taken a more reasonable approach, let's say, towards the operators, and it will be interesting to see kind of how that turns out, in my opinion.
Yeah, they have been fairly strict on marketing restrictions from the get-go, though, which I thought was quite interesting. They've kind of borrowed that from European markets, whereas US states, when they launch, it's a complete free-for-all and kind of anything goes. But we saw this week the first two operators, BetMGM and I think it was PointsBet. Yeah, exactly. Who were, they've already been fined by the regulator for marketing breaches. So. Yeah,
and the marketing breach was something like there was like
awful,
was it MGM who wrote
the
Twitter?
Bet MGM one said something like the more money you place on a bet, the more chance you have of winning. That was a tweet to consumers, and you just think, like you said, Pierre, that would be headline news in every national newspaper in England. I think if a gambling operator had come up with that,
riots on the street, but it goes to show how immature the North American market is, and also it seems that they are currently making the same mistakes as the Swedish operators did in the mid 2010s with this like very aggressive marketing towards the more kind of the segment of players that should not have been marketed towards, like quick wins, withdraw quick, so on and so forth, and that came back to bite the operators, both from kind of like an individual level in the country, and then also followed by regulation. And the question is then, of course, is that going to happen in the US as well?
I think we've seen it in every single market, and I think it's happening in the Netherlands now, and it will happen in the US eventually as well. And I think a primary reason for that is because gambling and online gaming is a difficult industry to understand and to get your head around if you're a politician or a regulator. The easiest thing you can do is either switch off or reduce the advertising, and that's why it's an easy one to get over the line, because you're not going to get any opposition to it, and it stops you from having to get into the weeds of how these things actually work and what the relationship is with affiliates, etc., which is all complicated and time consuming.
Yeah. And as one person in the chat points out here as well, isn't the UK doing the same thing now with the marketing ban? And as we point out here, the marketing ability to market yourself as an operator in Europe in multiple markets is heading backwards, right? There's more restrictions, not just in Sweden, but also in the UK, Spain, and elsewhere in Europe as well. That's the difficult reality that we face even in the regulated environment. Just as a final point here as well on Kindred potential sale, it's interesting as well to speculate what would the price of a sale be here, and comparative to LeoVegas here. So LeoVegas is being sold potentially here for $600 million. Whereas if we look at Kindred at the moment, and we would put the current market cap with a 44% with a 44% premium, like what LeoVegas got, we would look at a valuation of Kindred of 2.58 billion pound. So that equates to around, I think, like probably $2.9 billion or something along those lines. And so quite interesting as well to point out that Kindred is valued to around 5 times the size of LeoVegas, somewhere along those lines. Interesting to point out. So while Kindred have been facing a lot of headwinds lately, they are still an absolute machine. We shouldn't forget that they are a large operator, and they have been doing well in the traditional markets here. All right, boys, why don't we jump onwards here to the next topic, sports betting in California. Now, just as a prelude to this, I had the pleasure of sitting down with Thomas Allen, who is the managing director of equity research at Morgan Stanley, a couple of weeks ago. And I asked him the question, what do you expect from the big 4 states in the next couple of years from a regulatory point of view? And we discussed California, and his opinion was that he brushed California to side. This was about a month ago. He did not expect California at all to have any chance of legalizing online sports betting. But he said that it's much more likely that California will legalize retail sports betting. So you have to go into the store to place a bet. And this is because the tribes in California have quite significant political power. However, things happen very quick, and we are now looking at a potential legalization of California as an online sports betting market come the midterm elections in November, which is going to be a very interesting midterm election for many different reasons. Republicans versus Democrats fighting for the House and the Senate here, but also from an online sports betting point of view. So again, Jake, do you mind summarizing the story here? And then I'd love to hear the opinions of Nico here as well on this topic, because you've been talking about this a lot as well.
Yeah, sure. I was going to say I'll throw over to Nico, but I'll just briefly summarize. So basically a petition to include the ballot on the measure on the ballot in November gained more than 1.6 million signatures in support from state residents, which is all it needed. Yeah, we thought it wasn't going to make it this year, but it's back on the voting back on the voting podium for the latter end of this year. And I think what's important is that Thomas Allen was probably right, Pierre, in that retail betting as driven by the tribes is probably more likely to pass. But Peter Jackson, the Flutter chief executive, was saying in the Q1 webcast this week that they're not mutually exclusive bills. Obviously, one's concentrated on retail and one's concentrated online. So there's no reason why both can't pass. That is to say, ignoring the fact that both sides are lobbying viciously against each other to try and throw the other one, to try and make the other one dead in the water. And yeah, I think that will be a lot of it's down to lobbying, obviously, and the amount of money that that the operators can throw behind this online betting bill. I think it's backed by FanDuel, DraftKings, Bally's, BetMGM, Fanatics, even, who aren't even up and running anywhere. Yeah. Penn and Win. So yeah, there's some weighty support behind this bill, and they'll be thrilled to see it back on the ballot. But I don't know if Nico wants to go into some of the specifics of the measure, or just talk about it generally.
So, as you already pointed out, it's quite interesting, and it's all about lobbying. As of now, you have two ballots which are put out there. First of all, one has been initiated by 7 operators, and you already, named the big ones. And on the other hand, you have the tribes, which are for sure or wanting to make sure that their retail business will gain some momentum in California as well. So in the end, there's a controversial discussion going on, especially as if the market will open, you at least need to invest $100 million to actually, gain into the market, which will prevent startups from pretty much, let's put it this way, because we never know what's going on in the United States. If they are doing a seed A round and they are back with $200 million because they are claiming like, yeah, we will step into the Californian market. So with the traditional evaluation of startups, it will not be possible to gain $100 million and to enter the space of California. Just let us phrase it in this specific way. And what's also interesting, as of now, they reported, okay, we have 1.6 million signatures. They need roughly 1 million signatures. And what does this remind us of? Florida. In Florida, they had enough signatures to actually, run a lawsuit against the premises of Hard Rock Cafe. Thing is, they couldn't verify the signatures they already had, and if this will turn out to be the same in California, so it's still putting to a rest. Hopefully, they learned their lessons from what has happened in Florida, and then the ballot will be up for decision being brought to the Senate in November. It will be thrilling, and there are 2 heavyweights as of now standing in the same ring with the tribes and the online operators with the deep pockets. And as said, fingers crossed, they will finally manage to verify at least 62% of their already gathered 1.6 million, or 72% of their 1.6 million signatures. So don't count the chicken till they're hatched. So we will just see. We will just see how it actually turns out. But California has been on our agenda for quite a long time, will be interesting movements.
And I think you're exactly right to point out that this isn't going to be a market for startups or small businesses, Nico, because one of the other requirements is that operators applying for a license have to already be licensed in a minimum of 10 US states to even be considered. So, California set the bar and has said we only want kind of the brightest and the best in our state, a little bit like New York did altogether, like with a different licensing regime. But yeah, you're not going to get any disruptive companies in here. It's going to be those guys that are supporting the bill, and that's exactly why they're doing that.
Yeah, it is interesting because the discussion is very much on the US market. Is the market only for the big players, or is there a space for startup operators? And looking at New York and now specifically looking at California, the proposal here for this bill, the answer is crystal clear, at least for the bigger states. Is the markets are there for the big boys only. And this proposal, just to reiterate here what Nico said, it's the license fee is $100 million. Right?
I think that is for a 10-year license. In fairness, to put that into context, but still, that is a lot of money.
it's a pretty large one-off transaction. Like, I don't know how do you even transact $100 million? It's a lot of money, and the way the bill is being promoted as well, which is typical traditional American style, is that in order to get this bill through, it has to be dressed up into something else. And because at the end of the day, the voters, they don't really spend much time to dig into the actual nitty gritty of the bill, let's say. But it's being promoted as as an initiative to raise money for the homeless and for mental health causes. And so essentially 85% of the license fee will go to homelessness, essentially to fight homelessness, and 15% will go to the tribes that are not participating as online operators, and that is how the bill is being promoted in order for the voters to vote yes, essentially. And for anyone who has been in California, you will know how big of an issue and how front of mind the homelessness question is. So any bill that will raise money in order to try to solve this homelessness crisis that is taking place in California, you would assume will be something that the voters will not brush off at first glance. And so that is how they are looking to get this bill passed, let's say, in the midterm elections in the fall. So it's very interesting. I mean, we need to follow up again here with kind of people who are more experts on the American political system and the likelihood of a vote like this actually being accepted. But it'll be interesting to hear what the expectations are of this bill as we head into the midterm elections, because the price is obviously huge here for the American sports betting operators. California alone as a state is like the 7th largest economy in the world, right? And so obviously that market would be a game changer for the operators in the United States, and also not a state which the operators have been, let's say, forecasting will go live. So this will be kind of a positive surprise, let's say, if California will go live. Very interesting. Yeah,
it'll push those total addressable market forecasts up by another few hundred million, I'm sure.
Yeah, and it will push the EBITDA positive expected dates forward a year or two as well, I suppose, because it's not going to be cheap to enter the market, as we just.
I was going to say, any new market launches. Yeah, exactly.
So from a GDP perspective, we are speaking about a power which is as big as the UK, just to phrase it a little bit, even more. So they are, as you mentioned, within the top 7, within the top 5 globally seen. So it is for sure a big market. And if I'm not mistaken, Pierre, I'm not that good with names. You already had a podcast with one of the leading forces, one of the senators who actually pushed for New York to becoming reality. So it was quite complex how a ballot then turns to a bill. What are the steps and how it can be rephrased, etc. And we're pretty much will be seeing the same in California as well. So if you're interested in how this actually works, what are the steps, just give the former podcast just a listen when you just talk things through with the guy from New York.
Yeah. It's one of these classic IQ test. If you go on a first date and you want to figure out if your date is smart or interesting enough, you ask her, how do you pass a bill into law? Can you explain this? And then depending on the answer, you know if you have to step away or not, basically. Sidetrack, okay, but anyway.
You must be single,
by the way. If my girlfriend would hear it, she wouldn't be too happy. And to be fair, I don't know the answer myself either, so I don't want to. Anyway, guys. All right, shall we jump into the next topic here? Speaking about the US, finally, DraftKings have managed to close the acquisition of Golden Nugget that was announced about 7 months ago. And, again, just absolutely fascinating how the cards fall sometimes, because when this deal was announced, DraftKings was at pretty much the height of the boom that the share price saw last year. And it was almost like Jason Robbins and the DraftKings guys knew what was coming, because this deal was an all share deal. So there was no transaction of money taking place. And since the heads of terms were signed, DraftKings have lost about 70 to 75% of their market cap and the share price, which means that the valuation of Golden Nugget of 1.5 billion at that time, they would receive 1.5 billion in stock, essentially. That stock is now worth 365 million at the close of this deal. So not the best deal for Golden Nugget here, but obviously DraftKings in the misery of having lost a large amount of their market cap can at least be happy that they have closed a very good deal here to acquire Golden Nugget. But Jake, again, I'm sure you have a little bit more nuance here into the full story.
Yeah, I think you summed it up quite nicely. It's turned into quite a cheap deal compared to what DraftKings were expecting. But I think the key here is the 300 million worth of synergies that DraftKings hope to kind of realize as a result of this bit of M&A that they've done. And obviously it's primarily to strengthen their iGaming business, which is already pretty good considering they're, such a sports driven brand. But yeah, they're going to bring the Golden Nugget brand in-house, keep it as Golden Nugget, so they pursue a kind of dual brand strategy across iGaming. It's eventually going to be migrated onto the DraftKings proprietary technology platform, which we know is SB Tech software, and I don't know how much experience they've had with iGaming, but yeah, it's interesting. I mean, it gives them a much larger footprint in online casino, especially in those states that have regulated iGaming. And they've increased their long-term market share outlook for iGaming to between about 20 and 25% now. I think that's up about 5 percentage points to what it would have been before this transaction completed. And then we've just obviously discussed a huge state in California. And Tillman Fertitta, who is obviously the chairman of Golden Nugget, hugely influential financier in the US, and owns the Houston Rockets, which is an NBA franchise, and is from Texas, I believe. So if Texas regulates, then DraftKings have got an in here and some really influential pulling power on the board as well, and a major stockholder now. And he's said, he's going to ride this one out for the long term. He has every faith in DraftKings management team. He's one of 10 people that still believe that, I think, but he's locked in cash prices now. But yeah, I mean, even the share price now, you look at this deal getting over the line at a reduced premium, and I think DraftKings was down 8% yesterday, just when you thought it couldn't go any lower. So
really interesting here. I mean, I saw the news coming out yesterday, and I was thinking this is going to give DraftKings a great boost on the stock market, because the speculation has been, is this deal going to fall through? Because Golden Nugget had an out essentially to pay, I think it was like $120 million in a fine essentially to breach the contract and to continue running on their own. But obviously they decided here to go through with the acquisition, and the market yesterday reacted quite negatively. And now one potential explanation of that is the geopolitical landscape. So the markets in general yesterday had a really shitty day, to be honest. Everything was down yesterday, like Apple down 5.5% yesterday. I mean, Disney down 3%, Netflix down 7.7%, Alibaba down 6.5%, Bitcoin down 8% yesterday. So we have to keep in mind that it's difficult to see if the decrease in share value, especially in a speculative asset like DraftKings, was because of the geopolitical expectations. So I'm really curious to see what's going to happen today on the stock markets, and if the markets normalize today, maybe DraftKings will be able to get a bit of a boost because of this announcement. Because I mean, we are getting down to a valuation now at DraftKings which is pretty low. I mean, the market cap is $6 billion USD. We talked about earlier here that the current market cap of Kindred, for example, let's see if we get this right, is around 2.2 billion in USD. And so we are getting in this, obviously DraftKings has a higher valuation, but we're in the same range, we're not that far away. And with the expected EBITDA positive result and the amount of traffic that DraftKings generates here, we're getting to a territory now, and obviously Golden Nugget is a great acquisition. We know that. I mean, Golden Nugget, if we look at their financials of last year, they made $128 million revenue, and they posted an operational loss of only 30 million. Right? It's not a huge operational loss that the Golden Nugget is publishing with only American revenue, and so it's not that Golden Nugget will drag DraftKings down into further massive EBITDA losses. It's DraftKings that are acquiring a really solid business that has a really solid user database here. So you would expect that the markets at some point will react quite positively to the movements that we are seeing here. So I'm curious to see what's going to happen here when or if the market stabilizes a bit. But of course, we live in a quite uncertain times at the moment, and question is from geopolitical point of view, if this headwinds are going to continue on the public markets, or if we will see stabilization. And the next question as well is how this uncertain economic times will affect the iGaming industry. And it's something I'm quite curious about, that I would like to do a little bit more content about to understand myself. Because in 2008, when the financial crisis hit, the online gambling markets did just fine. We were good. It was just the land-based side of the business that took a big hit. I remember going to Las Vegas in 2008, and it felt like the entire city was just about to go under. I remember I rented a hotel room on the Strip at Stratosphere for like $10 a night. And I mean, at that time, Vegas was in a lot of trouble. But the online gambling industry was very healthy during the financial crisis. And I wonder if the same is the case now, when we are heading into uncharted kind of economic territory. Because if that is the case, we haven't seen that faith in the online gambling industry, let's say, as we are now heading into more kind of darker territory in the economic industry. So yeah, there's some points on my end, but without sidetracking too much here, Nico, heading over to you here on the DraftKings and the Golden Nugget acquisition. What's your takeaways here?
Yeah. So first of all, and as stated when we did the intro, so the M&A game is pretty much just started, and as also Jake mentioned, so with the owner being, or having their roots in Texas being considered or is one of the leading 4 states we have in the United States. So I'm pretty sure that we are now seeing the bottom of the stock price of DraftKings, and that they will recover. If they won't recover, they are still an M&A target, pretty much for Disney, who are specifically eyeing to enter the vertical of gaming with their ESPN Plus. And as said so often, the game just started, and we will for sure see some movements. And as already mentioned, it's always easy to talk about things ex post. I've always seen Disney buying the DraftKings premises, and but as said, it's thrilling times ahead. Thrilling times ahead of us.
Absolutely. And from one thing to the other here, I mean, we always talk about this, that we are never able to finish the points that we have set up for this weekly news. But today is actually one of those days where we managed to run through all the main points that we had written up today. But we had some extra bullet points as well here, which I think we should use the last 4 minutes here today, Nico, because obviously you are you're a proud German here, and there's been movements in the German market which we shouldn't forget. Here as well. Do you want to spend the last couple of minutes here today to update us on what's happening in Germany?
Yeah, it's quite interesting, especially with the new gambling treaty being in place starting 1st of July 2021, and no online casino licenses being giving out. But as I'm just taking a look at the headline, so we have 33 operators who are licensed in Germany with sports betting. Turns out they all are suing the state of Hessen based on that Hessen, doesn't go against all the non-licensed operators, which puts the licensed operators in a pretty deep struggle, as they are forced to, first of all, have a maximum spend of their customers taking into account. They are not able to offer all the markets, especially in live betting, and that's why. And this has never happened before. All 33 licensed operators filed a lawsuit against the state of Hessen. So this is sports betting side. Now heading over to the slots side, there has been given out just one license to an operator named Mernov. So if you just phrase
sounds like a vodka brand.
Wait. If you just phrase it, MER, it's the first three letters of Merkur, who is the leading German brand, and then NOV, which is Novomatic. It's the leading Austrian brand. So these two heavyweights, being considered as the biggest operators in Europe, are lucky enough to get the first and only license which has been issued by Germany. Thing is, there's quite a controversial, as 58 license applications are as of now in the decision process, or in the process of the State Authority of Halle. There has been one license which was already fully processed, and just the Glücksspielkollegium, which is the authority which sits on top of the official authority, and they literally just sign off like, okay, give it a go, and then you're able to operate. So the application of Mernov, so Merkur and Novomatic, wasn't this specific application number which has been already at the supervising authority since November 2021. So it's quite interesting. And going back to the lobbying point, which we see in the United States as well, there are some people are quite angry why the biggest overall operator already got their license, and why the authority just hand out one license. Why didn't they, do a batch of licensing, like 5 to 10s? Because the thing is, as of now, only this operator is able to advertise their offerings, right? So any other operator isn't able to do so. So, there's a controversial discussion going on, especially as the Merkur Group, they just bought 4 premises. They didn't officially release any agreement on this one. So it's quite interesting to just have an eye on what will happen next. And I'm pretty sure that, especially with the financial power of Merkur Group and Novomatic, they will now file different lawsuits against all the other operators who are offering their services in Germany illegally. So this story ain't over, and it never happened at any other time where 33 operators suing a state authority and one license being giving out. So it's some movements in one of the top 5 globally gaming markets.
Right. The thick plottens in the German market. I like it. Interesting. Mernov, I like the name. It sounds like a vodka, but yes, I like it as well. Guys, to start summarizing here a little bit today, I got a comment here on the side. Actually, it's a Narcissus Lion who's who's making the argument that an economic downturn would affect gaming positively, so it would have like a reverse effect to the economy. And it just reminds me of the classic lipstick index. Are you guys aware of that phenomenon? I'll explain. It's really interesting. Yeah, go ahead.
No. I just know the Big Mac index, but if it's quite similar to the lipstick index, I'm all yours. Just walk us through, Pierre.
Yeah, the Big Mac index is interesting as well, because that's a good measure for inflation, basically on a global scale, like which countries have more or less inflation, depending on the price of Big Mac. But the lipstick index is a little bit different. It is basically making the argument. There's an economist that coined the phrase lipstick index. His name is Leonard Lauder, who was a chairman of the board of Estée Lauder. So they are a massive producer of cosmetics, of course. And he made the argument that when there is a recession, when there is an economic downturn, the sale of cosmetics like lipsticks goes up. And then you're okay, why is that? And the reason is because the argument that he is making, right? It's right or wrong, but this is the argument, is that women substitute the more expensive purchases, like really expensive clothes and jewelry, for cosmetics in an economic downturn in order to save money. It's cheaper, essentially. And so in a bad economic environment, the sale of cosmetics and lipstick goes up. And similarly, you can make the argument for the gambling industry that we have a reverse outcome in a downturn and a bad economic climate, because especially kind of the lotteries and things like this, people kind of chasing the dream. You pay a cheap like a very cheap lottery ticket for €1 or 2, and everyone can afford that, and you buy it for the dream, right? And especially if you are not doing super well financially, you can still afford a €1 or 2 lottery ticket. And when you're not doing that well financially, that dream becomes more enticing, let's say. So maybe we should coin a similar phrase for the iGaming industry. I don't know what we would call the lottery index or something like that. I don't know, but we'll have to follow up and see if that is true. So, guys, thank you so much for joining this hour. Nico, Jake, it's just a pleasure to have you guys on board here. It's been, for us at Inside iGaming Next, it's been a crazy week right now. We have New York happening next week. We sold out the event this week, and it's been a week of madness trying to kind of accommodate the guests that want to attend, and people book travels and stuff. So this hour is always appreciated, just to get the mind off things a little bit and spend some time here with you guys and talking about some interesting movements in the iGaming industry. So thank you guys for joining me today, and also thank you for the audience for joining us here today as well. And wish you all a great week and weekend rather, and a day ahead. So thank you guys.
Thank you.
My pleasure. Thanks for listening, everyone.